Hey, give us your WEX word of the day again ahead of that big Fed decision later.
Well, I mean, all eyes are going to be on Chairman Powell, mostly in the post-game presser and looking at the dot plots. But my word of the day, Frank, is delusional. And I look at this from a different lens. And as we're thinking about the Fed's decision and the next steps, it just seems unrealistic to me that they can be aggressively cutting rates at the beginning of next year. And there's a lot of market watchers and Fed watchers that are pricing in a heck of a lot of rate cuts. And if we listen to Chairman Powell, and I think we have to because he's been very consistent for the past 2 years about being data dependent, that we're just not going to be in a position in the early part of next year for the Fed to come out and start cutting rates, because I just don't see the inflation target of 2% being realized over the next month or two. Now, I do think they can cut rates next year. I think we'll see that in the dot plots. I'm not bringing a bearish tone to the show at all, but I think it's a little bit premature to expect a whole bunch of rate cuts in the beginning of 2024.
All right, a bit premature. We actually just had Morgan Stanley's global chief economist on. He's forecasting a rate cut in June. So is that too soon still in your mind?
I mean, we'll have to see. Inflation has certainly been coming down, and the trend is nice, and this is what a soft landing feels like. It's been heading in the right direction. And I think that they're serious when they say they'll be data dependent. Seth also brought up the unemployment number, which is part of the dual mandate. And I think that he was right there also, that the Fed may want to see a little bit more balance in the labor market. But the nice thing about this soft landing is the labor market and the resiliency, because if the consumer can find work, then they can spend. And we know that the whole U.S. economy is on the shoulders of the U.S. consumer. So far, so good. I mean, we're still very optimistic about the second half of the year. To your point, June, or at least the latter part of 2024, I expect some rate cuts. And that we'll probably see that reflected in the dot plots, Frank, because in September, they showed 2 rate cuts. I expect that they'll do the same today.
All right, so you're kind of in line with Morgan Stanley, but just in general, I want to get a sense, what are your thoughts about the market right now? We've been talking all morning long. A lot of stocks hitting fresh all-time highs. The NASDAQ at highs we haven't seen since January of last year, along with the S&P, also in multi-month highs right now. What do you think of all this euphoria in the market? I know you said delusional is your word, but can any of this rally continue if we don't get a somewhat dovish tone?
You might see a little bit of a disappointment, but I think a lot of the enthusiasm that we're seeing is really just a broadening out of a market that hasn't moved in 2 years. And that's a good thing. And I think that will continue in 24 and into 25. So the delusion, I think, is more just reflective of a lot of rate cuts early on.
All right, Kevin, I want to get to your...
Not a symptom of the market.
Don't want to cut you off. I do want to get to your pick very quickly because we're running out of time. One of them is IBM. Give us a sense. Why are you buying IBM right now?
You know, we're old school. We love dividends. We love dividend growth. IBM is a company that, by their own admission, I think is a little late to the AI party, but Red Hat is really profiting from AI. So if you're looking to expand out, IBM is a cash flow machine. They pay over a 4% dividend. If we're looking at multiples, forward multiples only about 17. So I think there's a lot of value there. And most importantly, Frank, the stock's been in range bound really for maybe 3 or 4 years, and it's starting to break out. So I think IBM could be a surprise winner in the AI trade over the next couple of years.
You're also adding to your position of CME.
Yeah, this is a really fun story. It's more of a growth story than IBM. I mean, they've had 9 quarters of really strong growth, 9% revenue, 10% on earnings, but it's really a dividend story.
Got it.
And they just
Kev,
just declared a $5.25 special dividend. So we're excited about that.